Welcome everyone to the third module of AI Literacy for Accountants. In the previous module, I explored the transformative impact of AI on the accounting profession, examining its applications, and also engaging in a very simple hands-on activity with adjusting entries. In this module, I want to focus on the crucial ethical considerations surrounding AI. This module will equip you with the knowledge to navigate the ethical landscape of AI, ensuring its responsible use in both your academic pursuits and professional career. I'll cover vital topics like academic honesty, data privacy, accuracy, the need for verification, and how these ethical considerations shape the evolving role of accountants. Ultimately, this module is about empowering you to develop a strong ethical compass for AI use. As AI becomes more pervasive, understanding the ethical implications is paramount, especially in a profession like accounting that's built on trust and integrity. Ethical considerations in AI go far beyond just technical capabilities. They address the broader societal impact. The societal impact can categorize these into several key pillars: fairness and bias, about ensuring AI systems don't perpetuate or amplify existing societal discriminations. Transparency and explainability refer to the ability to understand how an AI system arrives at its decisions rather than being a black box. Accountability addresses who's responsible when AI makes an error. Privacy and security are about safeguarding the sensitive data that AI processes. And finally, human oversight emphasizes the need to maintain human control and judgment over AI systems. All of these pillars are directly relevant to your future work in accounting. Let's revisit academic honesty, specifically in the context of AI in your studies. It's crucial to reinforce that UWF's academic integrity policy fully extends to the use of AI tools. While AI can be a helpful learning aid, there's a clear line between acceptable and unacceptable use. Acceptable uses might include brainstorming ideas, using it for grammar and spell checking, summarizing complex text to aid your understanding, or generating practice problems for self-study. However, it is unequivocally unacceptable to submit AI-generated content as your own without proper disclosure, or to use AI for assignments or exams where your instructor has prohibited it, or to allow AI to complete work that's meant to demonstrate your unique learning and critical thinking. The golden rule: if AI is permitted, always disclose its use and cite appropriately, just as you would any other source. Accountants deal with incredibly sensitive financial data, such as client records, internal financial statements, and personal employee information. When you're interacting with AI, especially generative AI, data privacy becomes a critical concern. These models often process and learn from vast amounts of data. The risks include unauthorized disclosure if sensitive data is inadvertently included in AI's training or processing. There's also the risk of data leakage. If confidential information is inputted into a public AI tool, that information might inadvertently become part of its future training data, making it potentially accessible to others. Furthermore, AI systems, like any technology, can have security vulnerabilities that could be exploited. The best practice is clear: never input confidential or proprietary information into public AI tools. Always use approved, secure, and private AI solutions within organizations to ensure you understand and adhere to the future employer's data governance policies. I touched on this in Module 1, but it bears repeating with even greater emphasis for accounting professionals. Accuracy and the need for verification are non-negotiable. Generative AI models are known to hallucinate, meaning that they can confidently present incorrect, fabricated, or misleading information as a fact. AI is not the ultimate source of truth. It's a sophisticated tool for processing information based on patterns. As an accountant, accuracy is paramount to your professional integrity and the reliability of financial information. Therefore, you must always verify AI outputs. This involves cross-referencing information within authoritative sources like GAAP, IFRS, tax codes, and company records. You must also apply your logical review and human judgment to assess the reasonableness of the outputs and to identify any subtle errors or misinterpretations. In accounting, you can never blindly trust AI outputs. When you move from academia to the workplace, responsible AI use takes on new dimensions. First and foremost, you must adhere strictly to your employer's AI usage policies and guidelines. These will dictate what tools are permissible and for what purposes. Client confidentiality is sacred in accounting. Never use AI in any way that could compromise sensitive client data or privacy. Be mindful of intellectual property rights when AI generates content, ensuring that you're not infringing on existing copyrights. You'll also have a role in bias mitigation, actively working to identify and address any biases that might arise in AI-driven processes. Applying ethical decision-making frameworks to AI-assisted decisions will be crucial. And finally, always maintain human oversight and accountability. Remember, you are ultimately responsible for the work, even if AI assisted in its creation. To help you provide clear boundaries, let's consider some examples of acceptable versus unacceptable AI use in a professional accounting setting. Acceptable uses, always with appropriate human oversight, might include drafting internal communications, summarizing lengthy reports to quickly grasp key points, automating repetitive data entry or reconciliation tasks, generating initial drafts of financial analysis reports, or researching industry trends and regulatory changes. These are tasks where AI can really boost efficiency and provide a starting point. However, it's unacceptable to use AI to make critical financial decisions without thorough human review and judgment. As previously mentioned, you should never input confidential client data into unapproved public AI tools due to privacy risks. Relying solely on AI for audit conclusions or tax advice without your professional skepticism and verification is also not acceptable. Presenting AI-generated work is entirely your own without disclosure, where company policy requires that disclosure is a breach of integrity. And fundamentally, using AI to bypass professional judgment or ethical standards is always unacceptable. The role of the accountant is undoubtedly evolving. AI is shifting the focus from being primarily a record keeper to becoming a strategic business partner. With AI handling the routine, repetitive tasks, accountants will increasingly focus on higher value activities. These activities include providing strategic analysis, advising on complex financial matters, and interpreting the insights generated by AI. As such, you will become a crucial data interpreter, translating complex AI outputs into actionable business intelligence. Accountants will also serve as ethical guardians, ensuring that AI systems are implemented and also used responsibly and ethically within the organization, particularly concerning financial data. It also means becoming the technology integrator, often collaborating with IT professionals and data scientists to implement and optimize AI solutions. This dynamic environment underscores the critical need for continuous learning, not just in accounting standards, but in emerging technologies. To review, this module concentrated on major ethical issues related to AI in your academic life and future career. In Module 4, I'm going to be concentrating on the importance of effective prompting, which is a fancy way of saying asking the right questions. As the AI models continue to evolve and to embrace multimodal inputs and outputs, so too does the prompting. And as always, verification is paramount.